Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 294 on October 27th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Snap Inc., Delta Airlines, and the Proshares Ultrashort 20-Year Treasury ETF. And we discuss three new trades on Riot Platforms, the Proshares Trust, Ultra VIX Short-Term Futures ETF, and Macy's. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options or simply to get better at how you're already trading, we've launched the Weekly Option membership group. The group features video training that can be accessed online when it works best for your schedule, daily interaction with me and others in the group through a chat group, and ongoing videos and webinars to make sure everyone is up to speed and gets the help they need. This is a community of option traders that can support you in your growth. So email me immediately if you want to learn more about becoming part of this exclusive group. Now, the market's had a second week of lower prices. The Dow Jones Industrial Average lost 709 points, closing at 32,417 points on Friday. The S&P 500 index lost 106 points, ending the week at 4,117 points. And now it's time for the topic of the week. The topic of the week is about your relationship with risk. If I were to ask you, what is your relationship with risk? What would you say? Picture it like that relationship status on Facebook. For some of you, it would be married. For some, it would be single. And for some, it would be, it's complicated. I've been thinking about my own relationship with risk all week. My goal is always to maximize profit while minimizing the risk of losing money for every trade. And 3 times over the past week, I've given up some of my profit in order to fully close off risk and lock in a spread value that was my profit. I also acknowledge the fact that I make a living trading options, which means I have to be comfortable taking risk with my capital. Even though my relationship sometimes feels complicated, I am indeed married to risk. It's my job to understand risk, much like you would take the time to better understand a spouse. Your job as a trader is to manage risk. I can always tell when someone either hasn't made their first trade or has lost a lot of money because they fear risk. I can say with confidence that you will not be able to trade successfully if you fear risk. The beauty of using spreads to trade options is that your risk is actually managed. It's controllable. That means you don't have to fear it. You just have to size your trade according to the amount of risk, or I'm talking financial loss, that you're willing to take on that specific trade. So don't be afraid of risk. Everything we do in life has a little bit of risk, including trading options. Learn to understand risk, get to know risk, get comfortable with risk. The better you get comfortable with risk, the better you will be able to trade options. All right, so let's get into the review of last week's trades. We're going to start off with our covered call on Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. At the time, the stock was trading for $9.44 per share. I looked at buying stock and selling the November 10 call at 89 cents, which could give us a return of 15.36% in 4 weeks. Well, shares of Snap lost 14 cents, closing at $9.30 per share. The call option that we sold lost 63 cents, leaving us with a net profit of 49 cents if we were to close the trade out immediately. Now, even though the stock went down a little bit, we're still well above our break-even point. So there's no reason to make any adjustments on this trade so far. I like keeping the original economics intact until there's a legitimate reason to make an adjustment on these trades. So our first adjustment, if we were to make one, is typically to roll the strike of the call option lower. If you did that right now, you would give up more upside in the stock than you would be compensated for in selling that next option lower. So that's just another confirmation that there's no adjustment that's needed at this point. Keep an eye on the price of the stock and make sure you manage the trade accordingly. There's still 3 more weeks until expiration, so just stay on top of it. Next up, we had a credit spread on Delta Airlines, symbol D as in Delta, A as in Alpha, L as in Lima. At the time, the stock was trading for $32.22 per share. I looked at selling the November 33-34 call spread at 34 cents, which could give us a maximum possible loss of 66 cents per spread. Well, shares of Delta fell $1.57, ending the week at $30.65 per share. The out-of-the-money call spread that we sold is even more out of the money. Now, you could lock in 17 cents, or that would be half of your expected profit if you were to close the trade immediately. We're nearly $3 away from our break-even price right now, so there really isn't any need to make an adjustment on this trade so far. This one is working out exactly as planned. And then our final trade from last week was a debit spread on the Ultrashort 20-Year Treasury ETF, symbol T as in Tango, B as in Bravo, T as in Tango. At the time, the stock was trading for $44.10 per share. I looked at buying the November 43-44 call spread for 56 cents. That could give us a maximum gain of 44 cents, or that would be a 78.57% return in 4 weeks. Now, shares of TBT fell $1.18, ending the week at $42.92 per share. The in-the-money call spread that we bought is now out of the money and definitely in need of an adjustment. So my first move is to turn the long spread into a short spread or a credit spread. I'll do that by selling the 43-45 call spread at 64 cents. That will allow me to recover all of the money I paid to enter this spread initially, and that trade also leaves me short the 44-45 call spread. To collect a little bit more premium and to lower our break-even price and lower our risk on the overall trade, I'll look to sell the 41-40 put spread at 25 cents, which will ultimately create an iron condor because I'll be short the put spread and short the call spread. So trading those strikes would actually leave us with a profit price range of $41.44 per share. So definitely, if you were to execute that, you definitely want to stay on top of price to make sure that you protect this trade from going against you in the coming weeks. Meaning, if it goes against you, that means that it moves outside of that $3 trading range of $41 to $44. But that would be the way that I would look to adjust this trade if I was going to do that. With us being well below the break-even price, it seems like that is the best option at this point. So I'm definitely going to be looking to do that on Monday. So that's it for the trade review from last week's trades. Now I'll share a few trades I'm considering or possibly even in right now. Now, I also want to point out that we're still in that November 17th expiration range. So all trades for today's show will use the monthly expiration for November, which I just said is November the 17th. So let's start off with the cover call on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. Now the stock ended the week at $9.54 per share. I'm looking at buying the stock and selling the November 10 call at 79 cents, hoping for a return of 13.10% in 3 weeks. Now you enter this trade by buying stock for $9.54 per share and selling the November 10 call at 79 cents. This trade makes the most money if stock prices finish above $10 per share. The break-even price on this trade is $8.75 per share, and in real terms, the stock purchase will require $954, and you'll collect $79 per option that you sell. Next up, we have a credit spread. I'm looking at the Proshares Trust Ultra VIX Short-Term Futures ETF, symbol U as in uniform, V as in Victor, X as in X-ray, Y as in Yankee. The stock ended the week at $19.77 per share. I'm looking at selling the November 17 put spread at 16 cents, which could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the November 17 half put at $1.26 and concurrently buying the November 17 put for $1.10. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $17.50 per share. The break-even price on this trade is $17.34, and in real terms, you'll collect $16 per spread that you sell and have $34 at risk. And our final trade on the week is a debit spread on Macy's, symbol M as in Mike. The stock ended the week at $11.69 per share. I'm looking at buying the November 11 half call spread for 31 cents, which could give us a maximum gain of 19 cents, or that would be a 61.29% return in 3 weeks. Now you enter this trade by buying the November 11 call for $1.30 and concurrently selling the November 11 half call at 99 cents. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $11.50 per share. The break-even price on this trade is $11.31, and in real terms, you'll pay $31 to enter this spread, and your maximum gain is $19 per spread. So that's it for this week's show. Thank you guys so much for listening, and I actually got to spend some time with some listeners this week in person from other groups that I know, a couple of other groups, actually alumni groups, people that I've shared the podcast with over the years. I'm sometimes surprised, when you record a podcast that essentially has you talking into a microphone and staring at a computer screen, you'd sometimes forget that people actually listen. Now, I obviously see the statistics, and I get the emails from you guys, and I have people in the membership group. So I know you're out there listening, but recording the show is sometimes a little bit lonely. So when I am with friends or with other people who know me and know that I record the show, and they tell me they listen and they'll ask a question about a trade from a previous show, it always catches me off guard. But then I feel really good because I know that they're listening because they value what I share on here, not just because they're my friends. None of my friends are actually that nice. So I'm kidding. I have great friends. I love my friends, but option trading just isn't for everyone. So the fact that you guys sit every week and listen to me speak about option trading, and then you ask questions and you get involved, man, that's why I say I have the best fans. So thank you guys so much for listening. I hope you follow along with these trades. I hope you're getting a lot out of the show. Continue to email me. I love hearing from you guys. So let me know that you're out there listening. Tell me where you're from. I do end up responding to all of my email personally. So thanks so much for the email. I hope you guys have a great weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.